Hi everyone, welcome to CoinGecko Virtual Meetup number 17. This virtual meetup is presented to you by KuCoin. Thank you KuCoin for continuing to support CoinGecko. Today's agenda really is going to be split into two parts. So I'm Zong, I'm the head of research here at CoinGecko. I'm going to give a very quick 15 minutes rundown of our 2021 yearly report, and then I'll hand it over later to our co-founder, Bobby. He's going to be joined today by three esteemed guests, Adam Cochrane, Chris McCann, and Matthew Graham. And the main agenda of the day is they're going to talk about the state of the crypto markets in 2022, and they will spend about an hour doing so. So you'll have a chance to ask questions at the end, right? Or throughout during the session. So feel free to put your questions in the chat. So without further ado, I'm going to just jump in straight to the report. I'm just going to go very quickly and just going to hit some of the key points in the report. If you want to read it in detail, you should definitely check it out on our website. So the first slide is around the top 30 market cap and trading volumes in 2021. I think I can say that 2021 has been a great year for the crypto industry. The entire market cap grew by 176% throughout 2021. Even though there has been a dip at the end of the year, which continues into early 2022, essentially since November, when the market hit its all-time high at 2.53 trillion. Overall, I think if you put in money in January 2021, you should still be seeing quite some healthy return, right? We also saw quite healthy trading volumes at the start of the year, maybe the first half of the year up to May and June. You see it on this chart taper off somewhat in the second half of the year. I think really, as everybody knows, the growth in the second half of the year, even though the market cap continued to grow, has really been driven by NFT summer, right? And all the activity and all the excitement and all the hype that's been generated around NFTs in the second half of the year. But broadly, I think throughout the year, really, I think a lot of the excitement or a lot of the growth of the industry has been driven partly by the challenges being faced by Ethereum, right? And it really sort of gave birth or generated a lot of interest in people exploring alternative L1 chains, whether that is something like Solana, Terra, or Avalanche, or further developing and further building out L2 chains or side chains for Ethereum. So something like Polygon, or is it Arbitrum, ZK Sync, some of this. In order to try to solve the scalability issues and the expensive transaction fees that people are now facing with Ethereum, right? The other driving factor I would say is that meme coins really, showed significant growth. They really found a community here in 2021, especially after Elon, started tweeting about, Dogecoin, right? So Doge and Shiba are now really part of the top 30 coins by market cap, right? And have really, I think, as you all know, if you're ever on crypto Twitter, really, generated a significant, following and a lot of support, right? Stable coins also continue to gain traction. I think the story really is, when a new user or existing users come into the industry, after they've made a trade or after they have closed out a position, they might not want to withdraw it from the markets itself. What they do is they keep it in stables instead. And we have seen, stables really rise in volume. We now have 5 stable coins in our top 30. So as you imagine, it's Tether, USDC, Binance USD, BUSD, used to be DAI, and then now UST, right, is now part of the top 5, and they are all now in the top 30 coins. From a dominance perspective, I think if you look at the market share perspective, this is also the year that Bitcoin continues to lose dominance. We'll talk a bit more about that when we get to the Bitcoin section. But essentially, I think the days where Bitcoin was 70% of the market is quite far behind us, and really it has been quite a drastic drop. And that's thanks to Ethereum, but also thanks to the other, sort of chains that I mentioned earlier, the other alternative L1s, really jumping into the top 30, right, and challenging Bitcoin's dominant position from the start of the year. I'll only highlight a few things. So BNB, CRO, and OKB, right? So we're seeing a good mix in the top 30 now, right? BNB, CRO, and OKB continue to to represent the centralized exchanges, right? And the role and the position that they play in our industry, right? Axie Infinity, right? Obviously, flying the flag for Axie Infinity, the project, but also the NFT space and the whole GameFi play-to-earn space as a whole, right? Managed to also squeeze into the top 30 at the end, right? To really solidify its position as the premium, play-to-earn game out there. Obviously, things are changing, right? There are a lot of games that are coming out that is rising to challenge Axie's position. So it'll be interesting to see how this further develops in 2022. I've already talked about meme coins with Shiba and Elon. I think probably an interesting thing to point out as well is, even though there's not a lot of coverage or press around some of the old coins, or maybe you might have seen crypto Twitter complain about Cardano, right, at the end of the year. They are still part of the top 30. So people like Cardano, Ripple, Litecoin, Bitcoin Cash are still part of the top 30 and really still delivering fairly good returns, I would say, for their investors. Yeah. Finally, I think given that there has been so much growth for crypto in 2021, we are starting to see more and more protocols which have, or projects that have crossed the 1 billion mark in market cap. So if you think about this analogy to startups, for example, tech startups, typically the $1 billion mark is when you become a unicorn, right? So outside of the top 30, there are about 90 projects which have crossed the 1 billion mark by the end of 2021. So I would say in total, including the top 30, there's probably about 120 unicorn sort of projects or unicorn chains out there, right, which have achieved more than 1 billion in market cap. Let's jump straight into Bitcoin. I think even though there might be some on the call that will lament Bitcoin being the oldest and not much happened, right? It still have been a positive year, right? If you bought Bitcoin in January 2021, you're probably still looking at a 62% return, right? 63% return. And it also briefly hit its all-time high at about 69,000, just stopped short of crossing the $70,000 mark in 10 November, right? A lot has happened for Bitcoin. I think, when if you look at the list on the right, when the traditional markets look to adopt cryptocurrency into their treasury, or whether it's the first crypto that they're going to buy, typically it's about Bitcoin, right? So that's typically the first asset that they're going to buy. So you'll see, like, over 2021, a lot of the PLCs continue to buy into Bitcoin. We haven't seen them really branch out yet into other assets, but maybe that's something that will happen in the future. El Salvador obviously is the big story, right? Legalizing Bitcoin as legal tender, recognizing Bitcoin as legal tender in their country. Recently, you probably have seen, the Rio de Janeiro government is also going to allocate, apparently going to allocate 1% of their treasury towards Bitcoin as well. From a technical perspective, I think Taproot is probably the biggest upgrade to Bitcoin in 2021. This really gives Bitcoin, I think, some of the smart contract features that developers as well as Bitcoin enthusiasts has been asking for in order to make the chain more useful and more people can use the chain, right, for more sophisticated transactions, or whether it's sort of like DeFi transactions or applications that can be built on top of Bitcoin. This is also important, I think, when you talk about Bitcoin, it's hard not to talk about the hash rate, and this was a big thing that happened, after 2020's halving, right? So hash rate has been steadily climbing, I would say, throughout 2021, and then before it hit a big dip in July, when the Chinese authorities suddenly cracked down on Bitcoin mining in China, and overnight, I think this is what's called the Great Mining Migration, right? Overnight, all the miners in China essentially had to close shop and sort of move out of China into other jurisdictions, or they take the risk of continuing to operate in China, but in a very clandestine sort of underground manner. The biggest beneficiaries, or you would say the biggest targets of migration, was the US and Kazakhstan, where they saw their share of the total hash rates really increase. And well, Kazakhstan is now having its own problems, right? With energy problems and stuff like that. So I think the mining migration might not have ended, right? We might still see people might move from one to the others and from one country to another as these miners try to find a home. But the positive thing obviously is, as you know, the more hash rate it is, the more secure the Bitcoin chain is. And you can see from the chart, obviously, that since the low point in July, where we were at about 85 million terahash, we have hit all-time high just before the end of the year, 182 million terahash, right? So it shows that the chain is more secure than ever before, I would say, at least from a mining perspective. And this is really important for the chain itself. Onward to Ethereum. I think from an Ethereum perspective, it has been a great year for Ethereum. The price of Ethereum has quadrupled pretty much in 2021, despite all the so-called Ethereum killers being around and sort of challenging its position as the smart contract platform of choice, right? It crossed its all-time high twice, once in May and once again really in November at 4,008 before pulling back, right? From a development perspective, I think really the talk of the year is about ETH 2.0. It will continue to be about ETH 2.0, I think, until the merge happens this year. We had the London hard fork with EIP 1559, right? Deployed, where we start burning Ethereum in order to sort of reduce the supply, right? But I think all eyes is on ETH 2.0, is on the merge and whether it will eventually happen, right, and be a seamless, successful transition for Ethereum, and really whether it brings the scalability benefits and the scalability improvements, right, which will translate as well into cheaper transaction fees when that eventually happens this year. This is a chart on EIP 1559. I think that a lot has been said about whether ETH is eventually going to become deflationary, or I think it's probably too early to say at the moment. If you look at the chart, I think it's very clear. So if you look at the chart, ETH has really been inflationary for a long time, and I think it will probably continue to be like that, right? Because emission levels are kind of stable, right? Every day, there's X number of blocks that are being created, whereas the rate of burn is the one that fluctuates significantly. So we've only seen really a few days where the burn has actually exceeded the emissions of the day, right? Where essentially that day is a deflationary day for Ethereum, but mostly we still see inflationary days largely outnumber deflationary days. So on the whole, I think Ethereum will still be inflationary, but I think perhaps the rate will continue to slow down with EIP 1559. In terms of the biggest culprits, I think of the burn leaderboard, I guess, I think there's no surprise that OpenSea, given everything that has happened with NFTs and OpenSea being such a dominant exchange in that space, is the undoubted leader in terms of the burn leaderboard, followed by ETH transfers and also Uniswap V2, right, or Uniswap the DEX, right, being the leader in terms of of Ethereum burn. Right? Finally, I think from a gas perspective, I won't dwell too much onto this, but safe to say that gas prices have been high, and I think it's hard to see it coming down to a sustainable level until we hit ETH 2.0 and we hit the merge. So I think all eyes on that, like I mentioned before. Altchains. I think this is a section that we spend particular time on this round, right? With our report, you'll see quite a few slides on this in the full report itself. I think you probably will recognize some of these names on the slide. Like I described earlier, it really is driven from the challenges faced by Ethereum, and to a certain extent, you could say it's a natural evolution of the blockchain technology itself, at the most base level, in order to provide better throughput and better security, right, to people using the blockchain, right? From a returns perspective, I think Phantom, Terra, Solana, and Polygon is leading the pack, right, for returns in terms of Altchains. But really, it really is not too shabby even for Avalanche and Binance, right? You're still talking about 2,000, 3,000% return if compared to January 2021. So there are other altchains, of course, that didn't perform as well, but still, I think overall everyone has been quite bullish with their altchains of choice. And I think this will continue as Ethereum continues to struggle towards ETH 2.0, right? So to a certain extent, the longer it struggles, the more leeway these chains have to grow and capture market share. Right? So this puts them really in competition, I guess, in terms of investor sentiment and investor attention until we see the effects of the merge and whether it really does increase throughput for Ethereum and reduces the fee. From a DeFi perspective, I think this is for, even though 2021 has sort of been a quiet-ish year from DeFi in terms of coverage, I think it's really been largely overshadowed by NFTs this year in 2021. But really, I think it's not something to discount, as DeFi has sort of become, I would say, table stakes for every chain. So if you roll out a chain today, if it doesn't have a DEX, it doesn't have a lending protocol, it's almost like, what are you doing, right? There's nothing on the chain. And you see this as well in the growth of TVL, right? So we started the year really at about 30 billion TVL, but by the end of the year, we already hit 234 billion in TVL, right? It was mostly Ethereum again at the start, right? 98% Ethereum, but you see that, like from the whole narrative, right? So the dominance of Ethereum has really been reduced, ceding market share to other chains, right? Other L1s that are rising to challenge them. Yeah. From a sectoral perspective in DeFi, I think it's quite interesting. So most of the sectors, most of the large sectors are as you would imagine, right? So DEXs, lending, new aggregators, oracles, and derivatives, and insurance to a certain extent still make up the bulk of where the market is, where the DeFi market is. From Q3 to Q4, I think new aggregators were the ones that had the most gains, right? This is probably driven by people like Yearn, Convex, Insure, right? So the new aggregators and the insurance sector saw the most gains, whereas other sectors probably declined by a bit, right? But overall, I mean, it's a huge increase as you saw in terms of share, in terms of TVL for the DeFi market. For NFTs, I think it was really NFT summer in the second half of the year. OpenSea has emerged as the most dominant NFT platform out there, followed closely by Axie Infinity, right? Really, I think they are the number one and number two. CryptoPunks, yes, on some months still see significant volume, and between these three, I guess they are the top platforms where people are trading. Obviously, we're seeing new ones emerge by the day. This chart and could very well change, by the end of 2022. From a collections perspective, I think we look at NFTs from two angles. One is from a collection perspective, and one is from specific piece. I think for collections, really, there's no surprise there. All the what we would consider blue chip collections are all at the top of the list. CryptoPunks, Apes, Cool Cats, and all of these, they really are at the top of the list in terms of having the highest floor price and one of the largest total sales amounts, right? Axie, we put it in because even though the floor price is low, it really is the dominant project or dominant NFT collection, I guess, from a total sales perspective. From a single piece, if we look at NFT as single art pieces, Beeple really, and Beeple and XCopy, I guess, are dominate the top 10. Most of this were done through an auction, right? And these have really brought in large amounts for their artists, right? And also the large amount, I think, especially with Beeple's, first 5,000 days, really captured the imagination of the auction houses and of the more traditional investors, traditional art investors, right, who are interested now to participate in some of these auctions. It's been a great year. I I think for NFTs, I won't drain the slide. I think it really has been the year where NFTs took off, right? And I think, you know, we see big brands jump in, we see celebrities jump in, right? Everyone, you know, has got their favorite NFT. I think recently Jay Chou has launched one as well with Fanta Bear and stuff like that. But also, I think it's also the other side. I think people are sort of organizing to invest in NFTs as an asset class. So you see collector DAOs like, you know, Pleaser DAO, Flamingo DAO, Jenny DAO, but also funds like 3AC already setting up, you know, specific DAO, NFT funds, right? That looks to buy the most expensive or the most highly valued NFTs out there. There's also a point I'll mention around fractionalization of NFTs. I think that's something that we're going to see more in 2022, as you know, these so-called blue chip pieces, right, are sort of fractionalized, and you know, more people are given access to this NFT. Finally, we wrap up by looking through exchanges. I think if we look at this chart, I think centralized and decentralized exchanges both saw growth in monthly trading volume. It really come to a peak, I think, in May, right, 3.5 trillion, but also in November as well, where we sort of recovered and hit 2.3 trillion. I think from an overall perspective, we continue to see the growth of DEXs. You know, they are slowly eating more and more of the market share of centralized exchanges. The DEX to centralized exchange ratio is now about 10% compared to 6% from the start. Yeah. Top 10 centralized exchanges, I mean, no surprise that Binance is still number one, right? But it is, you know, slowly, even though it saw growth in market share in the middle of the year, it sort of is slowly declining year on year. 4B was probably the biggest loser in 2021. I think probably driven from, you know, them pulling up from China and due to the Chinese government crackdown. But really, I think overall, I think, you know, it has sort of been a year of steady growth, I would say, for centralized exchanges. Yeah. From a DEX perspective, this is a bit more interesting. I think Uniswap through V2, whether you talk about V2 or V3, still maintains, you know, its dominant position and is starting to squeeze Pancake. Pancake is slowly losing, you know, some of its market share, right? There are some that has grown significantly, like in Q4. So, for example, Trader Joe, right, has really grown and really captured market share. SushiSwap as well has sort of seen some decline at the end of the year due to certain challenges with their exchange. Right? But overall, I mean, like if you look at the trading volumes, we went from 77 billion in January to 187 billion in December. This really is, you know, a huge leap and a huge growth for the decentralized exchanges, and I don't think anybody will complain about, you know, more traders, more investors moving towards decentralized exchanges for their. Finally, I think we turn our eye to Bitcoin perpetuals. Actually, it's not been a great year for perpetuals. I think largely driven from the fact that people probably got wrecked in May when it first dipped, and that's probably turned people off perpetuals or turn people off futures for a bit. So you actually see that the perpetuals volume has actually declined throughout 2021. However, I think if you look at the chart, you'll see that, you know, Binance have steadily gained market share. They are now more than half, at about 57% of the market for perpetuals. Not sure if this is something that will continue into 2022. I think FTX is also rapidly gaining volume from an open interest perspective. And I think the jury is out there to whether the trading volume on perpetuals will come back. But I think for sure, I think if there are news, if there is things that are going to move the market, definitely traders are going to take position in the futures market. Yeah, so that's all I have for you today. It really was a very quick skip through the whole report. The whole report is about twice the size of my presentation. So like I said, do check it out on our website if you want to learn more about, you know, the trends that happened in 2021. So right now, let me turn this over to Bobby. We're going to move on to the next agenda session of the day, right? So like I mentioned, it's going to be an hour session. Bobby is going to be joined by three speakers, Adam Cochrane, Chris McCann, and Matthew Graham, and they are going to talk about the state of crypto markets in 2022. So stay tuned, and Bobby, the floor is yours.
Mic check, no problem, right?
All good.
All right, we are live. Good morning, good afternoon, good evening, ladies and gentlemen. Welcome to CoinGecko's virtual meetup number 17. I hope you had a good session early on listening to our head of research, Zong, presenting on our CoinGecko's 2021 crypto year-end report. My name is Bobby. I'm the co-founder and CEO at CoinGecko. And today we have three really distinguished guests. We have Adam Cochrane, partner at Cinneamhain Ventures, Matthew Graham, CEO of Sino Global Capital, and Chris McCann, partner at Raise Capital. We have by far the most epic CoinGecko virtual meetup number 17. We have over 3,000 people live on this crowdcast. So this is by far the highest attendance that we have had, and I'm super excited for everyone here. And so thank you very much, Adam, Matthew, and Chris, for joining us. We are pretty much spread out across 3 different time zones. Matthew and I on in the evening, for us 9:30 in the evening. Adam's about 8 in the morning, and Chris, gotta give heads up to Chris. Chris is dialing in from San Francisco at 5:30 in the morning. So coming in all the way just to talk about the state of crypto market just shows his dedication in the crypto market. So yeah. Let's jump in, guys. So maybe I give you guys a short time, maybe introduce yourself, your funds, what you guys do, and then we jump straight into the state of crypto markets. So maybe you want to go, Matt, you want to go first?
Sure thing. My name is Matthew Graham. I'm the CEO of Sino Global Capital, and we invest in best-of-breed blockchain projects all around the world, and help with our strategic competency here in Asia. Great to be here today.
Adam, you want to go next?
Yeah, sure. First off, thanks for having me, and apologies for the lack of camera today. Global supply chains are the worst. Anyway, I'm Adam Cochrane. I'm perhaps best known for writing far too much on Twitter, but I'm also the managing partner of Cinneamhain Ventures. And we sit somewhere between a VC fund and kind of almost a private equity consulting firm focused on acquiring assets and then more deeply working with the teams where we expect to make the return on capital from our impact on the business rather than just providing passive capital.
Chris?
Cool. And hey, everybody, my name is Chris McCann. I'm one of the partners at Raise Capital, venture fund based here in Silicon Valley. And then we really focus on all things infrastructure broadly. So data infrastructure, open source, transaction systems, developer tools, Web3 infrastructure, any like low level systems type stuff. That tends to be our sweet spot. And then I'm probably most known for, I was one of the initial seed investors for Solana itself when Raj and Anatoly were initially starting the project. We're also one of the seed investors for FTX when Sam Bankman was starting the exchange, and we supported a bunch of things within the Solana ecosystem as well.
Yeah. Thanks a lot, guys, for the intro. I think a lot of this inspiration for doing this state of crypto markets. I think all of us have seen Adam's epic crypto prediction thread on Twitter, 260 tweets on the state of crypto market. So I don't know if you have time to kind of unpack everything that Adam has written, but let's just kind of jump in and discuss what you guys think was going to happen in 2022. But before we get into 2022, right? Let's talk a little bit about the year that just passed. 2021 has been a fantastic year, pretty eventful, pretty crazy, and it was really positive. What was your one key takeaway from last year that you think works best?
I can go first, I guess. At least for me, for 2021, the main takeaway is that DeFi, NFT, and all this stuff is not going to be centered on one ecosystem, aka Ethereum. We've really seen like this multi-chain thesis play out in spades. Of course, like my purview, I look a lot within the Solana ecosystem, which grew tremendously in 2021. But to be fair to other things too, also Avalanche did, Near did, Terra did. There's a lot of ecosystems, and all these ecosystems are kind of forming and developing on their own, sort of all in aggregate. So at least to me, like this whole idea and concept of multi-chain and sort of multi-traversal across sort of many different asset classes and underlying layer protocol ones, this very much sort of bore out in 2021, and I expect it to continue kind of only more afterwards.
Yeah, I would echo what Chris said. We certainly have a very multi-chain view as well, which has, which as Chris mentioned, continues to prove true. And then I would add that it was tremendously exciting to see institutional players joining the game in the past year. Everyone from Jump has been in the ecosystem in a low-key way for years now, actually, but to see them become public-facing and make just an enormous splash. But then also, I mean, Citadel's doing the game now. We got George Soros investing. The level of sophistication has skyrocketed in the past year in terms of the people at the table. It's been tremendously exciting for me. And I think that the narrative is, people don't necessarily phrase it this way, but the narrative is coalescing around a crypto is eating the, used to be software is eating the world, and now it's crypto is eating the world. And I think it's just absolutely enormously exciting to see. So there's froth here and there, and there's disparities between liquid token valuations versus some of these seed rounds that we're seeing, things like that. But so short and medium term is always a little bit more of always much tougher to forecast. But the long term is just enormously bullish in my view.
Yeah, I think one of the key takeaways is if you lock people in their homes and give them free money, they're going to gamble it away on shitcoins, and retail is really bad at picking winners. But more seriously, the reason that they do that is retail is just so desperate for a win. Like they're so screwed over by traditional finance, so nickeled and dimed, that the only way they feel they can get out of this is to like YOLO government support checks into dog-themed coins in hope of some 1000x. And that's exactly why we need DeFi, because these economic systems are broken for the vast majority of people. So I think the froth we saw this year in this pandemic state is actually tremendous validation for traditional DeFi, these DeFi protocols that we started to build up around access to finance. And we've seen a lot of the narrative from crypto native people shift away from that because it's not new and exciting to us anymore. We've seen that for years. But I think this year, mainstream became aware of it, and we actually validated that problem market fit, that there are hundreds of thousands, millions of people out there who are underbanked, who need this stuff because they've been screwed over for so long.
Yeah, very, very nicely said. I think very good points from Chris. I think, Adam, what you said about people who are unbanked, it's crazy thinking about how people in the Philippines, Axie Infinity has gone mainstream in many Filipino villages, and think about it, like people don't have bank account but they do have an SLP wallet, and they basically spend an SLP in their local mart, for example. That's kind of crazy, and basically just jumping one level of innovation directly into this crypto, for example. I think I want to pick on Chris's point, right? You talk about how the multi-chain world is here to stay. So Ethereum, and then kind of gone on to like 5-6 different EVM chains. I think we at CoinGecko, we also started seeing the multi-chain future is here. I mean, it was a lot of hard work trying to track this thing. One of the products that we've been working on, geckoterminal.com. We've been adding a lot of chains. So far, we have 20 different chains, tracking 100 over different AMMs. Like, it's crazy how the ecosystem has kind of grown so much. I'm just curious. I think it's kind of like consensus that everybody thinks that the multi-chain future is here to stay for 2022. But I guess I'm just curious to hear from you guys. Where do you think this will leave Ethereum? Do you think it will lose its dominant status as the smart contract platform of choice, or do you kind of see it as the big brothers to kind of holding most of the TVL and most of the transactions? And I guess the bigger elephant in the room, like, where does all this leave Bitcoin? What's going to happen to Bitcoin? Like, is this even a metric worth considering, that the Bitcoin dominance percentage? That do we want to look at it, or just it will just slowly fade away over time, kind of like gold's no longer used by many people, I suppose?
Yeah, I've never thought Bitcoin dominance was particularly useful, but certainly I would anticipate that Bitcoin dominance will continue to decrease in a long-term way. If you ask me, a year from now, I have no idea, but in a long-term way, it will continue to decrease, as will Ethereum's market share. But that is not really a knock against Ethereum. Actually, in my view, I think it's just more maturation of the market. This isn't a monopolistic market, in my view, for smart contracts or really anything non-Bitcoin. So we actually continue to be quite bullish on Ethereum. Everyone likes to dog Ethereum, but we continue to be quite bullish. And in fact, we're announcing a blockbuster Ethereum-related investment in a few days. And I think the interesting question is, you could start to think about what multi-chain means. So does multi-chain mean 20 chains, or does that mean we'll start to gravitate towards oligopolistic? I would argue that it's probably the latter, with a long tail. So, but a lot of these are open questions. So I would kind of start the conversation in that way.
Yeah, I agree with a lot of sort of Maddie's sentiment, but I guess on top of that, I forgot to initially put this analogy out there, but it's kind of an interesting one that I tend to gravitate towards. I almost see these different L1 chains, these different ecosystems, almost like their own independent countries to an extent that can interact with each other, but they sort of also live a little bit on their own too. And so I don't think anyone will die versus the other. Maybe if there's an implosion or big hack or something, but I see these things more coexisting with each other over the longer term. And at least Ethereum today, it's still the biggest ecosystem by far on any metric you want to put it at. So it's very hard to bet on something like that, but that doesn't take away from any of the new things starting, because again, this whole ecosystem is still new in the relative sort of scheme of things. So the pie is sort of really growing for all. I guess in terms of your other specific one, in terms of Bitcoin itself, Bitcoin was always more about the monetary sovereign asset, a digital gold, or whatever narrative you want to pick with, and was never, even in the beginning, really all about smart contracts or DeFi or any of this stuff. And so you basically saw this bear out. Where again, I also think like people that are super hardcore and into Bitcoin or super hardcore into Bitcoin, they will continue to be so. And there will always be that contingency and use case. And you do see things like Lightning that have gotten some pickup on the payment sort of layer side of things. That they actually got an adoption with real merchants, and you could actually pay for McDonald's with your Bitcoin with Lightning, and like El Salvador and some other places. And so I think there'll continue to be some sort of work there. But in terms of all of this other innovation that you see, and NFTs and metaverse and all this other stuff, I don't really foresee this being mirrored in Bitcoin world. I think they're really going to stick with the kind of core thesis that they always have been.
Yeah, I'll agree with a lot of that and maybe take it to an extreme. I was really early for a quote unquote, often called an Ethereum maxi. I was probably one of the first of those to say that the future is multi-chain. When Cinneamhain came out with its OSI layer model, I took a lot of flack for that. It was an early call in Solana and things like that as well. But I'm also probably one of the first to suggest that there isn't a race here. Ethereum has already kind of won the race, because I don't see Ethereum as a consumer product so much as backbone infrastructure. When we think of the internet, we deal with our local ISP providers and cell phone carriers for access without ever having to wonder who's running and who owns these undersea cables that connect the US and Europe and Asia. And I think Ethereum is kind of the Web3 equivalent of those cables. It provides this core backbone for settlement where L2s and side chains and major transactions will compete for block space and security, while consumer-facing apps and other chains are going to pop up and kind of be more interoperable and pinning to it. So I don't see it as a consumer product. So I think it's kind of won that race, and it won't be, does Ethereum lose market share to these consumer chains? It kind of becomes that backbone infrastructure to it. As for your question on Bitcoin, I've long held the view that nowadays, I started this industry when Bitcoin was like the only player on the block that was of value, held spot Bitcoin for a long time. But I think realistically, Bitcoin has become a pet rock that kind of lost its way the moment that we lost Hal Finney's leadership in it.
Yeah.
First mic drop of the podcast of the day.
Ethereum and Ethereum flipping Bitcoin this year? Yes, no?
Don't know about this year, but I believe in a long trend. It becomes an inevitability when you talk about just the sheer scale of things that can be built onto Ethereum. Like it becomes this inevitable long tail where the collective sum value of all of these things cannot be outweighed by something that has a singular focus and purpose.
I agree with that.
Yeah, it's just a matter
I think the only way to play the price prediction and flipping predictions, the only way to win that game is not to play, in my view. So I'm going to point
price predictions.
Those never age well. You get every once in a while you get one, but that's not a winner's game.
Yeah, I agree. Last year, the big thing that came out was DeFi in 2020 and then NFT in 2021. What do you guys think will be the main narrative in 2022? Any inkling? I mean, it could be anything, right? Who knows, right? But I mean, any inclinations of what it could be, perhaps?
Yeah, I'll take a crack at this. Again, to Maddie's point, I am less going to have a singular prediction because, again, those are very hard to do kind of in the moment. But if you look at the things on the more edges that are kind of bubbling up and pushing things a little bit forward, I think you're starting to see sort of a few trends. One, the more obvious one is you're starting to see a lot of experimentation on the gaming side. There's been a ton of these games funded. A lot of them are taking their time to come to market. Games do have kind of a longer cycle, so I'm not sure how many of them will realistically launch in 2022. But one thing to be just watching for is how many get to any level of scale and adoption outside of Axie Infinity itself. And does this become a real kind of thing going forward? So one is on the gaming side. Two is you're starting to see a lot of weird experimentation in the form of social tokens. Social tokens, creator tokens, social meets crypto, this weird sort of intersection of things. A lot of experiments kind of on this. Maybe you're going to see something kind of break out this year. And then the third one I'd probably say is on the DeFi side, you're not seeing a lot of like DeFi for a lot of the participants. It's sort of more obvious and been here for a while. The bigger thing you're seeing now is this whole VE sort of governance locked concept and how that is applicable to either the incentives in the system or sort of gauge weights across it. And now like these things are almost becoming strategic assets that other protocols and DAOs and treasuries are acquiring themselves. So maybe less of a 0 to 1 innovation and slightly more of a 1 to 2 or 1 to 3 kind of innovation on really sort of rounding out the edges for a lot of these things.
Yeah, I'll echo that. I don't think there's some massive narrative breakout this year. Like I think it's going to be underwhelming because this is a year where we rotate from growth to value. This is a year where we go from making 0 to 1 protocols to polishing up those protocols. And so my 2022 thesis was all about like infrastructure between chains, refining governance tokens models and VE token models, and cash being king, right? Like I think this is a year where there's a consolidation as we kind of get rid of some of the froth that built up in the past few years, and we really focus down on what's working, what's not, what do we need to build to get to that next milestone of this, multi-chain future and decentralized governance that we've been envisioning for years. How do we build that up a level? And one of my hunches is what may come out of this that we don't see a lot in the market yet is a lot of new protocols and teams building on existing protocols. Like I think there's going to be an interesting opportunity to start making companies as a feature. So like Convex is really a bribery feature on top of Curve, right? And I think we're going to see a lot more of this emerging. And that was kind of the original vision of DeFi. But like for years, Compound Labs was the only people really building features for Compound. I think we start to see a lot more of this interoperability and protocols as a feature start to emerge in this secondary layer that's going to up level us. And, it is not interesting and shiny and new for the outside world like NFTs was. So I don't think it has that same boom this year. But I think it is critical infrastructure that we're going to start to build out.
Yeah, I mean, I would echo a lot of those comments. I think this is going to be a growing pain year. To give 2 examples that immediately comes to mind, I think that there are several prominent projects that exhibit what could be described as reflexive behavior. So I think that they're likely to be momentum generating on both the way up and on the way down. I think projects in the gaming space are particularly vulnerable to that, to maybe put a finer point on it. And then the second thing is that it may not be this year, but at least, but at some point we're going to have at least one major governance, almost like meltdown. So I think that behind the scenes, if you look at the way governance works, not on paper, but actually like in the real world, a lot of this is kind of patched together, and there are a lot of things that could fall apart if there were disagreements between project and community and multi-sig and all these disparate actors at loggerheads. I think there's a high risk of a governance, almost like a meltdown for at least one major project. Not any specific one. I'm just saying there's a likelihood that at least one major project will run into this. But I don't know if that'll be in 2022 or not. That's just kind of something that's inevitably going to happen in the next years. We'll see one very high profile, almost like governance, meltdown. But the reflexive behavior continues to be a big concern for me with a number of projects. And then I think also there's some weird market behavior these days. I'm not a big believer unless there's kind of exceptional circumstances in terms of trying to predict market price behavior at a macro level, but it's as I alluded to earlier, it is kind of obvious that there's that relative to liquid tokens, there's a tremendous amount of money sloshing around for seed rounds, and there's it's almost approaching, and not in the literal sense of the word, an arbitrage opportunity, but you could, it doesn't quite make sense, and so that's certainly a cause for concern.
I mean, to a large extent, like a lot of the crypto market sort of depends on what the Fed does these days as well. So I mean, whatever decisions that the Fed takes sort of affects the crypto market. So I mean, it wasn't the case before this, but I mean, you say there's just a lot of money sloshing around these days, yeah.
Yeah, Bobby, I'll chime in with one more that just kind of triggered, because I was very much thinking on the DeFi side with that question. I do think there's the potential that 2022 could be a breakout year for kind of centralized services offering some sort of wrapped DeFi. We've joked about this C DeFi before. I think we could see almost these commercial level players, whether that's on the banking side or whether that's somebody like a Coinbase, start to really wrap DeFi lending and things like that for retail US customers. And we've seen it a bit on some Asian exchanges, I believe, but it's really not penetrated the West. And I do think, we've got deposit interest on DAI that's kind of running through Compound on Coinbase through their Compound Cash treasury thing. I forget what it's called off the top of my head. It could be a year where we start to see that happening. That's going to be really dependent on just how the regulatory landscape and political landscape in the US shapes up as we come into a midterm year. But you could see that breakout on the centralized side.
Yeah, I forgot who said this like analogy or whatever, but I always thought it was a really funny one. But it's basically centralized in the front, decentralized in the back, or more specifically
bankless, I think.
Yeah, or more specifically, the traditional fintech people call it like the DeFi mullet.
Yeah.
So if you're familiar with the mullet style, I do see you do see a lot of these experiments. I've never been as interested in them, but they could make kind of a more meaningful impact of like simple sort of savings accounts or yield accounts or something like really easy. Almost think like a neobank, like a Simple or a Chime or something. But on the back end, as Adam mentioned, they're leveraging or integrating all of this DeFi stuff, yield things, pool things, lending stuff on the back end. And this is all packaged up as an easy, nice thing for kind of more of the normie people to understand. I do think there's a lot of people, again, more in the traditional fintech space, when they look at all these things, like a lot of them are sort of running on these specific themes.
I mean, you can sort of like a Robinhood offering a high yield savings account, which at the back end just tucks the money into Anchor protocol on Terra and use 20%. I mean,
you're scaring me. I would be very concerned about systematic risk if I saw that PR press release. I would, to be honest.
But I mean, I guess the big part about all these things about Coinbase offering a high yield account for on DeFi, for example, is mainly with the regulatory risk, right? I mean, I'm curious to hear from your point of view. What do you think will be the regulatory take in 2022? Do you see friendly regulations, more clampdowns in the US or in any other jurisdictions in the world? Obviously, the US is the biggest market, but I'm curious to hear from you guys.
Yeah, I'm going to go ahead and say that we should not expect friendly regulation. This is something that is complex, fast moving, and that has had tremendous problems. And I think we as an industry don't admit the amount of scams and things that probably are securities and things that have, fleeced retail investors that are problematic. And that if you don't know what you're doing in this industry, it is easy to get hurt. And so while I think governments and regulators are overreaching and taking this entirely the wrong way and not fully understanding the technology here, I understand where they're coming from. They are going to continue to clamp down because this industry gives them reason to. And we really need to do a better job as an industry of explaining ourselves, representing ourselves, funding lobby groups, and working with the regulators, right? Like governments are not regulatory entities that you are going to beat by just yelling at them and telling them they are wrong. Meet them on their terms, talk to them like people, and engage in writing the regulation, because regulation will come. And it's far better that we as an industry craft that regulation so that it works for us, rather than letting people who don't understand it create the regulation for us.
Yeah. I mean, this is a complicated one, but sorry. Go ahead, Chris, please.
No, go ahead.
I mean, I started as being by default very pro regulation, and I mean that's kind of like my default position and even nature. But I do increasingly share the view that a lot of things don't make sense and maybe even aren't being approached almost in good faith. Which has been a very unfortunate but slow kind of process over a period of years now. But I mean, ultimately, if regulation on a medium-term basis is kind of more or less neutral across the world, crypto gets stronger every day. Crypto lobbying gets stronger every day, regardless of whether or not you like lobbying. Personally, I hate lobbying and hate, for example, Citizens United. So that's the current rules of the game. and crypto lobbying is getting stronger every day. And this is going to start to make an impact step by step, legislator by legislator, especially. There's an old saying somewhere about, I forget which scientist talked about how new science is made as the old scientists pass away, basically, is what he said. I forget which scientist it was, Pascal or whatever. But look, as the legislators retire and as crypto gets stronger and lobbying power from crypto gets stronger, that's how progress is going to be made step by step. I don't think it's going to be convincing, Elizabeth Warren or whatever. That doesn't seem likely to happen.
Yeah, I echo a lot of those comments. My only, I guess, few other things to add is one of our portfolio companies that we also share with Maddie as well, FTX, has done a very good job at getting on the same level as the regulators themselves, actually working people with hand in hand, trying to rewrite, rethink, and sort of repurpose a lot of the existing legislation in multiple jurisdictions all at the same time. And a lot of this is like very messy behind the scenes work that a lot of us are really going to have to come together and fund and do and work on, which is, again, slightly easier for centralized companies, harder with the more decentralized and the more illegible that you get on these things. The other thing that slightly worries me too is, as much as maybe we can get on the same page of simple concepts like stablecoins, as soon as you start going further and further and further down the rabbit hole, I'm using a wrapped governance token asset to do a bunch of trading with and lending on top. Man, this stuff gets complicated super quickly. And so I just, I really hope a lot of us can take pause and really sort of see how we can do this in a kind of more legible way to the outsiders. And to Adam's point, we probably just need to do a better job as a whole, but industry is explaining a lot of this stuff. Because even for normal people coming into this, much less regulators, some of this stuff can get confusing very fast.
I'll agree on that, but I'll also challenge that it's not more complicated than something like derivative credit swaps, which we're still figuring out how we regulate, right? There's still regulation around these insanely complex and often stupid financial products that exist in TradeFi, and lobbying groups were able to sit down with regulators who I bet could not explain these financial products and get regulation that still allows them to exist. So I think we can get there, but it's about having the right engagement in the room. And when we see the kind of questions that we're getting from Congress and regulators right now who don't even understand, that it's not Uniswap applying a fee, but it's Ethereum's gas that is applying the fee, that shows that there is an educational gap. That means we're not going to get the regulation that we need.
I think the other challenge as well is things just move so quickly in crypto. If we are the full-timers, professionals in this industry, we struggle to keep up to date with all these things and then try explaining all these changes to the regulators as well. And I think new things keep coming up every week. So I'm trying explaining VE tokens to regulators. That's complex by itself.
I wouldn't want to be a lobbyist, that's for sure. I couldn't do that. That's one job I could not do. Crypto lobbyist. My heart would be in it, but I would get a headache every day a minute in.
Trying to understand what goes on is a headache itself, and then trying to simplify it in terms for the regulator to understand is a whole different challenge.
But bless all the regulators, the auditors, the accountants, everybody has to deal with this madness.
One of the big things that's kind of happening this year is supposedly ETH 2.0 going live. So curious to hear from you guys. Do you think, will this be a significant event or kind of like not much? Will Altchains, a lot of these alternative chains kind of grew on the back of Ethereum being slow, being expensive, but with ETH 2.0 finally going live, perhaps some of these reasons for the existence of these Altchains may not be as strong as what it was previously. I'm curious to hear. Do you think things will change once ETH 2 goes live, if it goes live as planned? They missed the deadline many times, but curious to hear from your thoughts.
I would view it more as a range of probabilities. You got to assess as a range of possibilities and put a probability on each one, I guess is what I'm trying to say. I would be hesitant to pick a lane on something like that. I think you got to more say, look, here are 5 or 6 things that could happen, and I would put a 30% probability on this, and continuing from there. But I would kind of start from that standpoint. I view it as an open question.
Yeah. Again, hard to predict something like this, but I would say in general, the anticipation of Ethereum 2.0 has been around for a long time. This isn't a 1 year, 2 year thing. This has been for a long time. To some extent, I think some people's expectation of what it will do might be more inflated than what will happen in reality. But even if it does come out to full fruition of exactly all the things that they said, at least to me, I think it makes the most impact within the Ethereum ecosystem, and especially within that layer 2 sort of ecosystem that sits on top of it. But at least to me, I don't think it has much impact on the things outside of it, aka the Solanas and Nears and Terras of the world. Like, I don't think it has as much material impact. I don't really see a whole mass of applications going one way or the other, by the way. Again, I kind of view these as more own separate countries, own separate kingdoms, and it makes the most material impact within kind of their own.
Yeah, so I mean, this year, the only is the phase 1 of ETH 2.0, right? So we're merging into this proof of stake chain. That won't do a lot for gas, maybe a little bit. It will dramatically change the inflation of Ethereum to being negative, which will likely help price pressure, create a larger demand for people trying to gobble up Ethereum for staking and things like that. But it doesn't really change the game for gas yet, right? That's this future sharded state. Now, even if we move to that sharded state in the future, I think we actually see Altchains kind of move towards just pinning their state to Ethereum for a shared security and interoperability. I don't see it being a way where like these end user applications have some sort of mass migration necessarily. But just like Andre's new solid AMM that he's developing on Phantom, which is really focused on being an AMM tool for other AMMs and protocols to tap into, I think we might see that the sharded future of Ethereum creates more of a B2B experience where it is other protocols and other chains who are leveraging that technology for storing different code, storing different assets, things like that, rather than it just being a mass migration of consumer-facing protocol.
Come back to some of the things that we talked about earlier. I mean, one of the narratives that we talk about is like a tokens deploying the VE curve model. So, I mean, it works when like the first token developing this bribing mechanism, like curve with this VE CRE thing, it obviously has a lot of traction. But when it comes to like the 20th token, and I'm sure everybody saw the success of curve and trying to implement it, and many other things, and the tokens are planning. When the 20th or the 50th token are thinking of implementing this VE governance system in place, do you think it will still work, or it will all kind of?
I definitely think there's diminishing returns, no question. And we strongly encourage portfolio companies to. Jet Protocol, I think, is a great example of a Sino portfolio company that is thinking about token economics in a really healthy long-term way. I think you have to think of it as you have a certain number of bullets, and how are you going to use those bullets? I think there's huge diminishing returns. That's my view.
Yeah, I guess, one of my comments, we love the seed run for Saber, which in the Solana ecosystem is probably doing the most experimentation around a lot of these concepts itself. Two is I don't think every single thing like deserves this. Like, it's much more of a if it makes sense for the protocol and if it makes sense for the incentives you're trying to actually incentivize. Like, you kind of have to think through the whole thing. You can't just slap on a VE token and say, here you go, and everybody gets excited about it. However, the thing that it can enable, which I think is super fascinating, is essentially what this is doing is this is incentivizing the people who are staking or sort of pledging the longest. When you add this with the sort of gateways on top of it, you're basically taking this large sort of emissionary token side, and you're redirecting it to the people who have pledged the longest to hold the longest of the protocol, not by voice, but by actual action. And I think sometimes the bribes and the other stuff, like while they're kind of fun to talk about, like the surface level stuff gets a little bit more attention. But when you look a little bit deeper, it's this core sort of incentivization mechanism. This is, at least to me, like the far more interesting part of it. Does this make sense for every single protocol? No. But the ones that could deploy it correctly, I do think it can make a material difference. But again, to me, this is less of a 0 to 1 innovation, and this is slightly more of a 1 to 2. Like, how do you better incentivize and not just have a pure sort of emissionary, sort of inflationary, broad-based kind of incentive mechanism?
Yeah, my 2022 thesis is definitely VE token heavy, right? Like, there's a lot of tokens in my thesis that are implementing that VE model, and I think make the mark because of that. That said, the VE token model is a tool, and so it all comes down to how do we use it and is it the right fit? Like, a hammer is great for building a house. It is a terrible tool for eating soup, right? At the end of the day, it has to fit within the model, and I think the VE model needs to have something that has active governance and drives revenue from an external source that it can share with long-term stakeholders. Now, if you can have all three of those pillars, and you can provide the boosting and you can provide the engagement model to kind of weed out passive extraction from the system, then the VE token model is going to be fantastic. And that's where Curve has been successful, is it's driven a lot of revenue, right? From external sources, from swaps across like-kind assets where there was minimal IL and it had deep liquidity, but that we needed something for, right? And so it's that revenue driver that really made a difference for them. So I think established teams that are pivoting to this VE token model who meet all those criteria will find a huge win. I think anybody who is trying to use the VE token model as an early emissions incentive to create just these loop tokenomics when they don't have that financial backing is going to be a problem.
Yep. It'll be interesting times, I would say. Definitely so many things happening. Just running short of questions, actually. Actually, I've got one question that I prepared. I was planning to ask this later on, but I thought I'd ask you now. Do you have any controversial prediction or takeaway for 2022 that you believe will be true, but many of your peers think otherwise?
I've got a bullet point list, so I'll let the other guys go first if they've got something.
All right, feel free. Take it on.
All righty. First, this is the first year I don't own any spot Bitcoin. Don't think there's any point. Second, cash is king, and we still have a lot of growth into this value space to happen. It's going to be a rotation. Third, existing blue chip DeFi tokens still probably have a 10x left in them over the right time horizon. Next, most teams would be better off building a $25 million to $100 million business on top of an existing blue chip protocol. But because VCs can't make a ton of money that way, most funds are pushing people to build billion-dollar protocols that are more likely to go to zero. EVM is like the JavaScript of Web3. Even if you don't like it, you probably need it because of the critical mass in that space. And that's why I'm so excited for the Neon project on Solana, because I think that will bring a lot of developers into that space. And last one, 98% of current use cases in DeFi and GameFi are a total miss and will go to dust. We have thousands more to figure out, but a lot of the ones that we built today will not hold long term.
That's a lot. It's a lot. Nice leads, Adam.
I'll give I do not have a bullet point list to read off of, but maybe thinking two of those, I would actually take I guess one of them to throw out there is, I think that the existing stablecoin landscape of dollar in bank account sort of fully backed system, I do not think this will be the dominant form of a synthetic dollar going forward. I think the far more decentralized versions or synthetic versions or logarithmic versions or some version of this, I think there's going to be more crypto native fiat representation. Probably also not just the dollar, by the way. There's also lots of other things that exist out there. I don't think the existing one is the set in stone one, mostly because that just opens a lot of things downstream open for a lot more sort of regulation or potential attack surface area, or there's just a lot more inherent risk when you're doing this. I think the completely untethered version is a far more sort of sustainable one going forward.
I would strongly agree with that, because there's also no way we don't reach a point where regulation allows banks to come in and make their own fractional reserve currencies. And that's going to be way more profitable for them, because they're going to be able to, put mortgages out on the back end of that. And we're going to see that. So I definitely strongly agree with Chris's take there.
No sovereign countries will follow El Salvador's lead in 2022. That's my 0.
Nice. What do you guys think of the NFT market? We haven't really spent much time in the NFTs. In the NFT space. Do you think the market's kind of overheated, too much froth in the space, or do you think kind of NFTs kind of like the key component for us to bring more mainstream users into crypto, and that's kind of what the whole crypto industry should be focusing on to kind of push the NFT narrative so that we can onboard more people into crypto, and then eventually they will look what's next beyond NFT and then there's DeFi and all the other things. Curious to hear from your point of views.
Yeah, I could start with this one. I have two minds about this one. From an investor side, outside of the obvious, I guess, kind of marketplaces themselves, NFTs are a much more challenging investment area. Like really, you're looking at like the PFP, your gaming items or artistic assets, and they're really fun for individual collectors. But as a investment fund, it's sometimes hard to find the true scalable sort of ideas within this ecosystem. That being said, my other mind on this, coming from more of the creator and collector end, I actually love NFTs. Like I actually built one of these, the playground sort of waves within the Solana ecosystem. I collect a bunch of these things. I love these things. I love to display them. They're really fun, and they actually are far more impactful and meaningful for the end creators themselves. But to me, like I see these as more enabling assets. I still think people, again, it's easy to think of them like artwork or the art items, but remember, NFTs are sort of core foundational. It's a non-fungible token that can be used for many, many, many different things. They could be represented as financial objects. They can be represented as lending objects. You could apply DeFi to this stuff. There's a lot more than what you can do with it. So I do think NFTs will be an enabling block for other things in the future, and we will see lots of experimentation around it. Although the current conception of just pure sort of collectible type stuff, I see as more of like the beginning entrance into this, not necessarily the final form of this.
Yeah, I'll echo that. I think, we hear this idea a lot that we've reached the mainstream with NFTs, and I don't think that's anywhere near true, right? There may be this awareness tipping point where, like, if you pulled a vast majority of Americans, maybe 20% of them actually know what an NFT is. But like top projects in the space have like 10 to 20K holders, and a lot of those are duplicate across many of those projects. I love the art stuff, but I'm also the kind of art nerd that would go out and buy a rare piece of art, right? So when I have that opportunity to buy NFT art, I'm in, but I'm a niche. The profile picture stuff, it's fun, but that's not a long-term use case in the way that we have it now, because some of it gets eerily close to securities in a way that makes me uncomfortable. And some of it is just people hoping that someone buys it at a higher price. Some of it is that need to belong to something greater culturally than ourselves. And that's fun, but is that, worth hundreds of thousands of dollars per item? Probably not. I think the most interesting use cases we will have for NFTs a decade from now are things that do not exist. It will not be in the art. It will not be in the gaming items. It will be in putting non-fungible things from the financial world. It will be title deeds and things like that, things that are probably a lot more boring to us, but will be a much bigger market. I think the real art, if I can call it that, don't know if that's the right phrasing to use. I might get lambasted for that. A lot of the interesting generative art that has a movement outside of blockchain that is coming onto the blockchain. That stuff is really interesting, and I think will be around for a long time. And I think NFTs are a great way to explain blockchain to people. But I think the really interesting stuff is yet to come and will only be created once people who are really experienced in building NFT infrastructure stop focusing on the current froth, because that's where the money is, and start reeling back and becoming more inventive about these applications.
I mean, probably the vast majority of NFTs out there currently go to zero over the long term. The platform plays are super interesting, but I think once we find a way to make crypto-centric, crypto-native games that are actually super fun to play, NFTs in-game is enormously interesting. But I think social NFTs need to find a way to provide some kind of richer experience in terms of interacting with creators, and a lot of the other stuff is just going to go to zero. But NFT in gaming and the potential for new NFT use cases to emerge, super interesting. NFTs as a platform, interesting as well. Hence our recent Metaplex investment.
Yeah, my only other quick comment to add on this, I guess spending a lot of time on the NFT side and talking to, I guess, the more normal people coming into this. I will say the other thing, which is, again, it's even a little bit surprising to me. For some population of people, you could explain all the NFT or all the DeFi, all the pools, all the trading, all the thing, and people sometimes just don't really care about any of this stuff. But you show them a cool, picture, a profile thing, or artwork, or whatever, and people really want to get that thing. And so they're willing to go through the pain of setting up a wallet and getting some USD or Sol and figuring out all this sort of stuff. And by doing this, it's almost kind of an effect. It's almost like a Trojan horse to some extent, where it forces you to be inputted into the system and forces you to actually do the painful thing of setting up the wallet and doing all the stuff.
Yeah,
and
absolutely.
Then once you have that, then you kind of start wondering, well, what else can I do with this stuff? What else can I play with? What else is out there? I see it more as the entry point, or kind of the pull factor that, again, I never really saw with pure sort of DeFi stuff outside of a more sort of niche audience.
Yeah, I absolutely agree. It is the drug dealer giving you the first hit free. It removes all of the friction from this process, and it is enough of an encouragement that people will go over tremendous hurdles. And I think when you explain it as it's digital trading cards with scarcity, right? People can wrap their heads around that regardless of the background that they come from. Where they start to lose it is when you say, yeah, but it's costs $10K to buy it, right? There's just this disconnect in where these markets are going and the things that people want. And I also really want to, just while we're having this conversation, drill down on this GameFi stuff. I am an absolute play to earn skeptic. I've consulted a little bit in the gaming space, and the gaming space is brutal. Making a game that is fun and engaging is a tremendous challenge in itself. Most games are then also very ephemeral, and we lose interest in them over time. They have scaling caps. No game has figured out good economics. They all suffer from internal inflation. And if you want to make a game sustainable in its economics, the best example we have is EVE Online, who had its own in-house economists for many, many years, and they still struggled tremendously. But the market of people who were really fueling that kind of play to earn were people who loved the game so much they were willing to come in and spend money on it to kind of compensate all those who were earning out of it. And I don't think we see that yet. And a lot of the economic models are not set up for that. And we really push this play to earn model that brings in a lot of people who want to earn, but not a lot of people who are doing the spending to make that balanced economy. And there's a lot of smart people working on this problem. The team over at Axie is very well aware of that problem in their ecosystem and working rapidly towards it. But I think it's a tremendous challenge that we underestimate how ephemeral games are, how fleeting the interesting games are, and how much money needs to be pouring in out of love of the game rather than economics of the game to sustain that model.
Maybe one final topic that we haven't really talked about, DAOs. What do you guys think about DAOs this year? Do you think? I mean, we saw a group of people coming together to try to buy the U.S. Constitution, right? Constitution DAO. So a group of people, I think, trying
Also,
to...
Dune was another one.
Let's not mention that one. Yeah.
I mean, a bunch of guys try to buy a golf course, for example, right? So I'm curious to hear, like, are you guys, I mean, I guess, do you guys think this will work? Do you think this will, I mean, will the governance even work? I mean, that's a whole different question altogether. If you buy a golf course, you know, I don't know if does it even seem like a security or not for all these DAOs. Do you think DAOs could work, or, you know, people will just end up with crap load of infighting that is just not going to work in DAOs? I'm just curious to hear from your thoughts on DAOs in general.
Asking if DAOs work is like asking if a C Corp works. Sure, right? For the right tooling, right? Like it's just a background infrastructure. Where I think the problem is now is that our voting mechanics and our collaboration tools in this industry are in their infancy. And we don't think through how do we deal with dispute resolution? How do we deal with fair voting in these systems? But there are millions of clubs and organizations and things around the world that would love better ways to collaborate, especially ways that they can trustlessly hold money. Like I think of condo associations and neighborhood associations, where if they could hold money and make transparent voting decisions around that money, that would be incredible. But we are so far from there because of the complexity and infancy of these tools that I don't think we get there until we can abstract the ability to create and run a DAO down to the level of simplicity that WordPress or Shopify make running a website, right? When we start to really hard code some of those things, have strict type plugin based architecture around this, put it on L2s, now we might have some interest in DAOs. I don't think the current iteration, securities concerns aside with some of them, I don't think the current iterations are accessible in a way that is going to change the world dramatically yet. But I think we're on the right path. And startups like with Tally, where you're beginning to be able to easily vote and see votes happening across a lot of these more advanced DAOs that have the governor contracts right now. I think as we standardize tooling that allows us to interact with these ecosystems and eventually launch them, we can get there. But I think there's a huge UX interference right now where I don't think in the near term they're going to dramatically change the world in the way that some of us who are really hard knocks in this space want them to.
Yeah, I strongly agree with what a lot of Adam said. Maybe two comments to add to this. One, I think when a lot of people think about DAOs and governance model, they always gravitate towards like the mechanics of it. How do you vote, the thresholds, sort of how sort of that whole sort of systems work itself. But I don't see as many people working on the more pure social side. A lot of these groups use Discord sort of by default to organize stuff. And Discord was just really not meant for a lot of these things. And usually the social and the governance is completely disconnected from each other. And sometimes these things are really hard to kind of coalesce kind of in one thing. If anybody listening for whatever reason is building like a Web3 Discord native version or something that kind of integrates the ideas in this, I'd love to talk. Chris at Raise Capital, feel free to ping me. I've been looking at a lot of things. I really want to see somebody kind of innovate on this side. And two, I guess for all of my skepticism and sort of all that involved, I do really love hanging out like in a bunch of these groups. Like I've legitimately like made friends from some of these groups. Like I found people I probably wouldn't have otherwise. It's fun to like talk about this stuff. It's fun to organize these things. These things tend to be a little bit more loose knit and unorganized and disorganized more than I think people have expectations for. They might think of DAO as like this, I don't know, governmental affair where like everything's in order, but honestly, it's mostly people running around with their heads cut off inside a Discord group. That's mostly our current implementation.
Yeah, that's that last comment. Oh, sorry.
But yeah, I'd love to see more real thought being put into the social aspect.
Yeah, that last comment is my primary issue. So generally speaking, I think it's a fascinating concept, but it's quite premature. But my biggest issue though is not even about the maturity. It's the fact that I tend to be a big believer in structures that can allow for strong leadership. And I think that that DAO structures are counterproductive for that. So I'm very wary kind of in general. But
Let alone
regardless
the-
of that, it's quite early days for DAOs.
All right. Thanks a lot for the insight. I mean, it is. I mean, you just describe like how far we are from what it could be. I mean, just the UI UX. Just I mean, sometimes you're so deep in the trenches that it feels that that's the best way. But tell this to anyone outside crypto, and it's just so hard to kind of do any of these things. I guess, guys, I think we're really running out of time now. So I guess, is there any one final thing that you want to say on what you think 2022 will look like before we kind of wrap this up?
Negative for Russia, apparently, based on Bloomberg breaking news that there's a proposal to ban crypto. Bank of Russia seeks to outlaw mining and trading of crypto, is the Bloomberg breaking news. So I guess not too positive for Russia, huh?
Yeah, I mean, I think it's really hard to tell what this market is going to look like with the kind of global macro situation. And that's used a lot as a buzzword right now, the global macro. But if we're real about it, like, the economy is crap and disconnected. Supply chains are broken as all hell, as you can see with my lack of webcam. People are divided. Like, it's not great out there. And we've come off of 2 years of a lot of money being made on vaporware and promises, and that usually doesn't go well. And so I think the right bet is that without any major catalyst changing this, we see the crypto market kind of actually make its first rotation from growth to value like traditional markets do, where protocols that are doing some real value and have external revenue flows become outperformers. And whether that's in an up market, if we're lucky, but it could be that they just do better in a bearish bleed out and we have to survive as this market continues to mature. But I think we as an industry will look more inward and focus on polishing up infrastructure, improving UI, building better versions than on top of the primitives that are already there, and focusing on the regulatory landscape. So I think this is kind of crypto's year to look inward and better itself, right? Like, some cheesy eat, pray, love thing. We're going to focus on making our industry better and improving the gaps that we have and the real concerns that the external market has, because all of those people who unfairly bash crypto on these kind of minimal talking points, those all come from real concerns about real problems. And I think this year will be a lot less external hype and a lot more opportunity for us to focus on that building. And I think the teams and projects that come out of that will have very strong years moving forward. But I think it will also be a death knell for a lot of projects.
Yeah, and my only small comment, I guess more on the individualistic side for this, is if you are thinking about starting a company, joining a company, being in the space, spending whatever time, make sure you pick the area that for whatever reason you're really interested in. And again, I don't really care. It could be social, it could be games, could be NFTs, could be DeFi, could be whatever it is. I don't really care. But in the crypto space, we tend to have these ups and downs, and things are definitely not smooth ever. And so you really need to fundamentally believe in and do what you love. And if you don't do that, it's very easy to get disillusioned in this space. So pick carefully, like act slowly, don't try to do everything at once, narrow down, and whatever it is, for whatever your own personal reason, don't care, like do that thing.
I think that's very, very, very useful advice. Like, got to love what you do, because the market's just going to do is go up, goes down, and then if you're not there for the right reason, it's just really hard to kind of stay the long haul. I can speak from experience. I've been through so many cycles. It just takes a lot of conviction to believe that this is the space, this is the industry, this is the thing that you want to do to kind of do the long haul.
And Bobby, don't be so humble. You've been long time OG in the space, man. You've been doing this forever.
Yeah. All right, guys. Thank you very much for taking the time to share with us your insights for today. Really appreciate it.
Thank you.
Adam, Matthew, Chris, really for you. So thank you very much for making this the best ever CoinGecko meetup ever. We have close to 4,000 people listening in live.
Oh, good.
Really amazing. So
this is why Bobby said we're some of his favorite guests. It's just...
Yeah, I'm always worried about guests not showing up for meetups, and for today, like, just gonna shout out like Adam, Matt, and Chris showed up super early, and I was like really relieved.
Ready to play.
All the speakers are you coming up for the meetup? So thank you once again. So yeah, this CoinGecko Meetup 17 was brought to you by KuCoin, and as a special treat, there's a $5 promo for any of you who are interested in getting any of the CoinGecko merchandise in our store at store.coingecko.com. Use the promo code CoinGecko5. And yeah, thank you very much to all 4,000 of you listening in live on this CoinGecko Meetup. And have a great day, evening, and year ahead, everyone. Thank you.
Thank you.
Thanks.
Thank you.
Thank you.
All right. Bye, everybody.